Hey, are you stashing your cash in a savings account and feeling like it's just sitting there? Maybe you've heard about money market funds and the potential for a little more oomph for your idle dollars. Well, you're in the right place because today we're diving deep into something super relevant if you're looking to maximize the return on your short-term savings, the current yield on Fidelity money market funds. Now, before we get into the nitty-gritty numbers, let's take a step back and understand why this even matters. In today's economic landscape, where inflation can nibble away at your purchasing power, simply letting your money sit in a low-interest account might not be the most strategic move. You're essentially losing ground over time. That's where instruments like money market funds come into play. They offer a potentially higher yield than traditional savings accounts while still maintaining a relatively low level of risk and high liquidity, meaning you can typically access your funds quickly when you need them. Think of it like this. You have a certain amount of cash you're not planning to use immediately. Maybe it's for a down payment in a few months, an emergency fund, or just capital you want to keep safe and accessible while it earns a bit more than it would otherwise. Money market funds pool money from many investors to purchase short-term, high-quality debt securities. These can include things like U.S. Treasury bills, commercial paper, short-term debt issued by corporations, and repurchase agreements to sell and repurchase securities. Because these are generally low-risk, short-term investments, money market funds are considered a relatively safe haven for your cash. Fidelity is one of the biggest names in the investment management world, offering a variety of money market funds with different characteristics and, crucially, different yields. So, when we talk about the current yield, we're essentially asking, what percentage return are these funds currently generating on an annualized basis? This is a key metric for investors because it gives you a snapshot of how much income your investment could potentially earn over a year, assuming the current rate stays the same. It's important to understand that the yield on money market funds isn't fixed. It fluctuates based on prevailing interest rates in the broader economy. When the Federal Reserve raises interest rates, for example, the yields on money market funds generally tend to rise as well. Conversely, when rates fall, so do the yields. Other factors, such as the specific types of securities held within the fund and the fund's expense ratio, the fee charged to operate the fund, can also influence the yield you ultimately receive. Now, you're probably thinking, okay, enough background, just tell me the numbers. And I get it. You want to know what kind of return you can expect right now. However, it's crucial to understand that providing a single, static number for the current yield on Fidelity money market funds is a bit tricky. Why? Because Fidelity offers several different money market funds, each with its own specific investment strategy and, therefore, its own unique yield. Let's consider a few key Fidelity money market funds. First, there's the Fidelity Government Money Market Fund, SPACs. This is often a go-to option for those prioritizing safety, as it primarily invests in U.S. government securities and repurchase agreements backed by U.S. government securities. As of today, April 23, 2025, you might see the 7-day yield for SPACs hovering somewhere in the range of 5.0% to 5.1%. The 7-day yield is a standard measure for money market funds, representing the average annualized income return over the past 7 days. It gives you a very recent snapshot of the fund's performance. Next up is the Fidelity Treasury Money Market Fund, FZFXX. Similar to SPACs in its focus on government debt, FZFXX specifically invests at least 99.5% of its total assets in U.S. Treasury securities, cash, and/or repurchase agreements backed by U.S. Treasury securities. This can be particularly attractive for investors seeking to avoid state and local taxes on the interest earned, as Treasury income is typically exempt at that level. The current 7-day yield for FZFXX as of today might be very similar to SPACs, perhaps also in the 5.0% to 5.1% range. Finally, let's touch on the Fidelity Municipal Money Market Fund, FTX. This fund invests in short-term municipal securities. The key here is that the interest earned from municipal bonds is often exempt from federal income tax, and sometimes even state and local taxes, depending on where you live. This makes it particularly attractive for investors in higher tax brackets. The yield on FTX is typically stated on both a nominal basis and a tax-equivalent basis. The nominal 7-day yield as of today might be in the range of 3.5% to 3.7%. However, when you calculate the tax-equivalent yield, the yield a taxable investment would need to provide to equal the after-tax return of the municipal bond, it could be significantly higher depending on your tax bracket. For someone in a higher federal income tax bracket, the tax-equivalent yield could easily be in the 5.5% to 6.0% range or even higher. So, to directly answer the question, there isn't one single current yield for all Fidelity money market funds. It varies depending on the specific fund you're looking at. As of today, April 23, 2025, you can expect the 7-day yields on popular Fidelity money market funds like SPAX and FZFXX to be in the vicinity of 5.0% to 5.1%, FDRXX around 4.9% to 5.0%, and the nominal yield on FTX lower, but potentially much higher on a tax-equivalent basis for those in higher tax brackets. Furthermore, think about the accessibility and convenience that Fidelity offers. They have a user-friendly platform, making it easy to buy and sell shares of money market funds. Many people already have brokerage accounts with Fidelity, making it a seamless addition to their existing investment portfolio. You can typically move money into and out of these funds relatively quickly, providing the liquidity that's a key benefit of money market accounts. Another point to consider is the difference between money market funds and money market accounts offered by banks. While both aim to provide a safe place for your cash to earn interest, they operate under different regulatory frameworks. Money market funds are securities offered by investment companies, while money market accounts are deposit accounts offered by banks and are typically FDIC insured, up to a certain limit. Money market funds are not FDIC insured, but they are generally considered very low risk due to the nature of their investments. In conclusion, if you're looking for a relatively safe and liquid place to park your cash and earn a competitive yield in the current environment, Fidelity money market funds are definitely worth considering. Just remember that the current yield isn't a single number but varies depending on the specific fund. Do your own research on Fidelity's website, understand the different fund options and their objectives, consider your own tax situation, and always look at the most up-to-date yield information before making any investment decisions. Keep an eye on broader economic trends and interest rate movements, as these will influence the returns you can expect from money market funds. With that said, thanks for watching and until next time.